Artificial intelligence is everywhere. It is everywhere in our conversations. It's everywhere in the news. Most of us are using it all the time. So on the Moolala podcast, we're talking about AI from lots of different perspectives. And today our focus is going to be on the fintech sector. So fintechs are these organizations, these companies that are kind of coming at personal finance differently, and they're particularly incented to make use of this emerging technology. Our guest is Jason Pereira. He is a senior partner and financial planner at Woodgate Financial, and he also is the host of a podcast called the Fintech Impact Podcast. Hello, Jason.
Bruce, pleasure.
I mean, we're going to have this conversation. People will be listening to it from a year, like a year from now, 2 years from now, and they'll be like, wait, what? The world has changed so much. Things are moving quickly. How would you characterize the time that we are in as it relates to AI and the fintechs? I mean, they're really doubling down on this.
Yeah, look, any organization that has any degree of technical proficiency is incentivized to learn to implement artificial intelligence across the board. So the fintechs are no different than anyone else. The difference with them, though, is that they're born into this world, right? They're born into the world of digital change and digital delivery. So they already have, for their people to just shift gears and start tapping on new tools is not a big cultural shift. Whereas large mainline institutions who have largely gotten by throwing lots of people at a problem, this is a major shift for them. But make no mistake, they're both looking at the same future and wanting a piece of it.
Yeah, the major banks can't readily help you open up an account virtually, let alone do all the fancy things. If I were to oversimplify the two worlds in which a consumer is affected by AI, first is client facing, like what are the
Yes.
ways in which I can use it? And the second is behind the scenes that may make them more efficient. I don't know. Talk a bit about where the innovation is. What are some examples of the
Sure.
smartest, most forward thinking providers? What's going on?
So let's start with the back end, right? Let's start with what happens behind the scenes when paper has to be pushed, data has to be pushed, right? To date, it's been a lot of people on a lot of like old systems. And these things could have been automated a long time ago, but the problem is the systems we had for them before still required a human to make a lot of decisions and deal with the weird fuzzy logic. That is being solved by AI. And it is going to, in my mind, basically finally deliver on the promise of decimating a lot of back offices, quite honestly.
Right.
So the basic people who are doing data entry and moving data between two systems, that is not long for this world. And by way of example, JP Morgan last year said that they had already put in place over 200 AI agents working in their back office at a cost of under $2 billion. And we're seeing that level of productivity gain already. And then Citigroup recently announced, not to be left too far behind, over 120 have been implemented already. So this is happening, and it's going to accelerate as people get their heads around it. Also, the way the companies used to work is they would look for a complete solution from a lot of companies, just kind of waiting for someone to solve enough of their problems. Because AI allows them to not only code their own solutions and take better control over things, what we're seeing now is more of a turn towards, okay, you have something of value that's data or that's some other utility or some sort of like proof point. We just want an API call. We're gonna steward this ourselves. So they're curating their own solutions now more than they were before. Now, when it comes to the client side, there's two sides. There's the self-serve side, and then there's the human side. So the self-serve side, we've all used chatbots, right?
Yep.
We've seen how terrible they were in the pre-AI age. I don't know how about you, but I was always incredibly frustrated and just like
Yeah.
next
There was
command, getting
no
it.
question they could answer.
Yeah, like the game was to see how fast you can get to refer you to a person.
Yeah.
That's how bad it was. So now they're actually able to provide you with real information. They're able to better train on your specific case and your habits if the data's there and provide you relevant information. Now, relevant but not perfect. Okay. So just like people aren't perfect, these things aren't perfect because they're probabilistic engines. Which means they high probability they're right. But I'll tell you right now, anyone who's played around with these things and knows the subject matter knows how god awful the answers can get sometimes. Just go ask about capital gains rates. Half of the times they're still telling you it's a two-thirds inclusion rate that never passed into law. So that's what we're going to see is we're going to see better self-service tools, not just from the ability to request information outside the box, but also in terms of what information is going to be displayed to you. Because as they fix this stuff on the back end, what they can let you do on the front end is going to increase. Okay. Then we have the human facing aspect. And you hear a lot of doomerism constantly every technological innovation, this is the end of financial advisors, it's the end of this job, whatever. The reality is that a machine telling you to do something versus a human coaching you to do something who understands not just what the machine is saying, but what you are, who you are as a human, is a really deep moat. Is really hard to depose, and for good reason. Because hey, if technology solved all our problems, we'd all have six packs, Bruce. Now I don't know about you, I don't have a
Oh, I
six pack.
have one. It's buried under a couple of layers of fat, but it's there.
Totally, but I could totally download a million apps on this device tomorrow to tell me how to get a six pack. It's not the lack of knowledge that prevents us from succeeding. It's everything else in our lives that does that. So the human as a facilitator or coach towards your success is still going to be something valuable. And so what's going to happen with those people is they're going to be better enabled, right? I'm going to spend less time on meeting prep. I'm going to spend less time managing the operations of my business because just making sure paperwork gets done is also still a challenge for me. But those types of things are going to effectively run on rails and be more quickly adaptable than they were before. So, and allowing, if you look at, this industry and go back, I don't know, 15 years, the average advisor running, say, 100 households needed more staff than they have today. You fast forward another 5, 10 years, they're going to need less staff than you do now. So it is more so about getting rid of the busy work and the heavy lifting and spending more time with the human is the opportunity here.
With that efficiency, with those productivity gains, where do you think they then deploy that additional resource? Is it, hey, this is great, we're more profitable because we don't need so many humans in our back office? Is it to innovation that may benefit the client experience? Is it their ability to explore new markets and new offerings? Like, what's the end benefit to us? And I hope you're not going to tell me it's just about sweetening their profit margin.
So, I mean, the only job of a Canadian bank is to increase the dividend. Let's face facts, right? So first and foremost, the capital investors will benefit absolutely if this comes to fruition. Canadian banks, I have not seen examples as interesting as the U.S. ones, but that's everybody's going to have to get there at some point. But make no mistake that there will be a division of how this efficiency gain gets consumed. I have no doubt that it will line the pockets of the people who invest in capital. I don't believe there's going to be upwardly lifting of wages to the employees in any way, shape, or form because, hey, market rates, unless there's suddenly a competition for talent, it's not going to result in higher wages. But it also very well can lead into, yes, moving into other markets potentially, but this is Canada. They're already in every market. So I don't really know what that means other than maybe going internationally. And then the last piece is it could simply be for large institutions to basically pass on cost savings, believe it or not,
Hmm.
because they actually have that, and try to drown out competition even further. So that's the large institutional side. On the smaller fintechs, these are usually nimbler, leaner startups that basically find the technological opportunity to compete with the mainline banks. So they still have territory to cover, right? So the ability for the likes of a Wealthsimple or the best example, or anyone else in the tech world to go after another line of business for the bank will increase because the cash flows will be there.
Right. The other phrase that we talk a lot about as it relates to fintech is open banking. As you look at the intersection of open banking and what and if and when and all those question marks and AI, what becomes possible when those two come together? And I see you're shaking your head.
I'm shaking my head.
Are they not going to come together? Is open banking an overpromise?
Well, it depends on what country we're talking about, because there's plenty of
Canada.
examples
I'm
around the
talking
world.
about
Okay, well,
Canada.
then forget it. Like, I mean, we keep on talking about frameworks being launched and papers being, I'll believe it when I see it, because they do everything they can to basically, we are an oligopoly, all right? And the oligopoly will do everything it can to protect itself and does through lobbying, full stop. Canada is a laggard in the open banking and open data world, full stop. So, whatever comes out eventually will no doubt favor the incumbent players in a way that will not enable a consumer. But what is possible? Let's talk about what's possible. What's possible here is enabling your actual ownership over your actual data, which technically belongs to us under PEPIDA, under the Privacy Act. Okay. The difference is the banks are basically arguing, or the institutions are basically arguing about what form they give it to us in. Because if they give it to us in a really crappy form, like PDF statements versus a data feed, there's different business implications there, right? So anyone who's ever tried to get a loan from a new bank, whether it be for a business or anything like that, especially in this country, you know the story is, well, we don't know you. We don't know you yet. We
Yeah.
don't have a lasting relationship, right? And I've even sat across from bankers saying, okay, but I will literally log into my bank account right now and download the statements and give you every transaction I've had for 2 years. No, we can't accept that, right? And for me, whatever friction that exists there. But when you think about the fact that you can be underwritten financially for any need at the touch of a button, is potentially what we're talking about. It's like simply, here's a workflow. I need to get a mortgage from this other bank. I need to get a business loan from here. I need to get a car loan, whatever else it is. Okay, download our app and go through the secure walkthrough. Okay, I bank at this company. Boom, secure login, and it goes not only transfers, but it transfers in a way that is secure and that is basically fulsome, that gives the information that they're entitled to. Because right now we do have data aggregation tools out there, but those aggregation tools are limited and typically break all the time because the banks are doing what they can to prevent it from
Yeah.
going out there, and it's not being done in the most secure manner. So really, this is about liberation of the consumer's data. The more control we have over data, the more of a fulsome picture a business can have about us as an individual and can underwrite us as a unique individual better than before. So think about something like credit ratings, right? Credit ratings are a limited view of our life, right? If a more comprehensive view of our financial life was available, then frankly, we'd be able to potentially be underwritten as a
Right.
person, not
And
as a
then
group.
AI can do what it does best, taking
Correct.
disparate data points and finding patterns that might be
Correct.
hidden from human eyes.
Yeah.
I want to ask you one last question before we go. As the host of your show, Fintech Impact, what is one thing that surprised you in conversations you've had recently as it relates to AI specifically, given that you're kind of at the bleeding edge as you have those conversations?
I don't think it's so much that I've been surprised because I'm talking to technologists here, right? I'm not talking to lay people. I
Yeah.
think lay people, my beliefs have been reinforced in this space. And specifically, it's that the narrative around there is around replacement of everything. That's not going to happen, right? Expertise still matters, right? There was a issue, recently legal stocks got hit because this new Anthropic plugin for lawyers came out. And anyone who knows how law works knows that, okay, well, the articling students are in trouble now because research and writing is going to be commodity. But managing the relationship with that large enterprise, that's not going to be replaced, right?
Right.
So that's one thing. And then the other narrative is that everybody thinks this is going to happen tomorrow. No, this is a slowly boiling frog, okay? Companies need to get their heads around it. The technology has to be at a level where it is good enough. I'd argue the first 2 years was getting us to a position of good enough to start doing some of this stuff we're talking about now. But it is also going to take time with a lot of institutions because, again, these institutions are big. They have lots of hierarchies that they have their own separate silos of needs. They have their own separate people working their own best interest, right? And working through that bureaucracy and even having people in those positions with the knowledge of what's possible is
Right.
a real detriment that they don't exist in those companies. So it's going to take a while.
Really interesting stuff. We will clearly talk again on this topic as it
My
moves
pleasure.
so quickly. Jason, thank you for joining us today.
My pleasure, Bruce.
Jason Pereira, senior partner, financial planner with Woodgate Financial. He's someone who's pretty in the space as it relates to artificial intelligence. So I'm sure we'll speak to him again about what he is seeing on that front.